So to summarize global developments, the global headline inflation has moderated, but the pace of decline has slowed down in major economies due to the stickiness in core inflation. Central banks in major economies have continued to lower their interest rates, but at different paces depending on their inflation and growth outlooks. This should improve global financial conditions and market access for emerging markets. The global growth is projected to improve to 3.3% in 2025 from an estimate of 3.2% in 2024, supported by strong growth in the United States and India and improved prospects in the growth in the United Kingdom. Risks to the global growth outlook relate to elevated uncertainty on trade policy amid rising tariffs on imports and further escalation of geopolitical tensions, particularly the conflict in the Middle East and between Russia and Ukraine. Kenya's real GDP growth is expected to remain above the global, the sub-Saharan Africa, and emerging market and developing economies averages both in 2025 and in 2026. Turning to macroeconomic developments, the domestic macroeconomic developments, the core and non-core measures of inflation for Kenya, jointly developed by the Kenya National Bureau of Statistics and the Central Bank of Kenya, were launched last month, January 2025. Core inflation excludes products whose prices are highly volatile and transient, and therefore provides a more comprehensive measure of the underlying trend of inflation. In addition to overall inflation, the CBK will keep track of the core and non-core measures of inflation in line with global best practices in inflation targeting central banks. The introduction of core and non-core inflation measures also aligns with the East African Community guidelines on the computation of harmonized CPI in the region. The total core CPI basket comprises of 275 items with a total weight of 81.1% in the overall CPI, and is therefore a more representative basket and closely tracks the overall rate of inflation. So domestic inflation remained below the midpoint of the target range of 5 plus or minus 2.5% in January 2025, and this was supported by lower core inflation. Core inflation declined from 2.2% to 2%, and what increased the overall inflation from 3% to 3.3% was a pickup in non-core inflation from 5.2% to 7.1%. In terms of the contribution to overall inflation, as you can see from the right-hand panel, the core inflation has remained relatively stable. Its contribution has remained broadly unchanged since around October, and what has been driving the increase in overall inflation has actually been the non-core inflation. And for example, between December and January, core inflation, its contribution remained at 2 percentage points, but non-core inflation increased from 1 percentage point to 1.3 percentage points. With regard to core inflation, the decline in core inflation was mainly on account of lower prices of processed food and also alcoholic beverages. For the so those are the two key, and you can see the decline from 2.2 to in December to 2%. You can see there at the bottom the main drivers for that reduction were the processed food items that declined from their share declined from 0.2 to 0.1, and similarly for alcoholic beverages, a reduction from 0.3 to 0.2. With regard to non-core inflation, the The main drivers are food crops and related items. These were the ones that mainly drove the higher non-core inflation. And within the non-core inflation, what really has driven the increase from 5.2% in December to 7.1% in January were the food crops and related items. And you can see there that the percentage, the contribution for the food crops increased from 5.9 to 8.2%, compared to the energy, fuel, and utilities, whose contribution actually was negative, was an increase negative from minus 1.3 to minus 1.8, and the transport contribution was only 0.7 percentage points.